How can you tell your friends without analyzing the market of whether is it going to go upward or is it going to go downward or is it going to go sideways? You always see your friends asking you whether they should buy Bitcoin or whether they should wait for going it a little bit cheaper or even down. How can you tell your friends without analyzing the market of whether is it going to go upward or is it going to go downward or is it going to go sideways? Can you really know for sure where these markets are going? Are they in a certain kind of trend? And can you really maximize your profits if you really predict the markets or analyze the markets for the right trends? So, it's always said in the cryptocurrency market and in traditional markets that your trend is your friend. What does that really mean? It only means that if you could analyze and gauge the trend, what is happening already, and if you can position yourself as a trader, you will be highly likely to get profits or win the situation of your trade if you are following the right trend. What if you made a long position or did a purchase or a buy position on any kind of stock or asset, and what if the stock went down? What if you bought Bitcoin at, let's say, $40,000 levels and it went down? How could you really understand that you shouldn't have bought at $40,000? How could you understand that if you did buy at $40,000, what could have been the right trend for you to make that call? Because you already did, and maybe you made a wrong choice. Because today the markets are actually at $32,000. But this is a dilemma for traders throughout time. Trend analysis has been one of the major things for people to understand, and it is the most basic concept. You need to understand that if a general trend specifies that it is going in an upward move, why would you bet against it? It is highly unlikely that you would get any kind of profits from your trade if you bet against the general direction of the trend. The trend really specifies where the asset's position is moving towards, where it's going to have new price discoveries, and so on and so forth. Let's try to understand this by a way of understanding the charts and the markets, because if you really do understand what trend analysis is, and if you can use that to your own advantage, then you will be able to make significant profits from the trend itself. If you see my screen right now, then I've opened a daily chart. It's a daily chart of Bitcoin INR, and I have taken a view from a vantage point. So this obviously chart is from pre-2017 to now. What you can see is that the market really moves in a certain pattern. So let's just try to, if really you need to understand how the market really moves, then you can see from this chart as well, in any kind of stock or commodity or cryptocurrency, you will see that the market really doesn't really move just like that. All right, that's really that's just a straight line on a 45-degree. The market moves generally on a trend, and it goes up and it goes down, it goes up again, it goes down again. So generally, if this is the movement of what you have seen in the past for any kind of performing asset, you can relatively say that the movement is upward, because this is actually following something like that. This is a 45-degree straight up trajectory. It's an uptrend. What if the market, and let me just select this again so that we can just point that out. All right, and if we just move that away, if the market was going something like it had moved here and then it was like going like that. So obviously this segment of the market, which is this one, I'm going to recolor it for green. This section of the market seems to be in a downtrend. Because it's going downward, it has a downward trajectory, and everyone can understand that it's going downwards. But how do we understand this from charts? I'm keeping the Bitcoin INR charts open so that we can actually get in a feel of how we could have understood these trends and maybe we could have made huge gains. Bitcoin's near about $32,000 at the moment. It went to $42,000. But I will show you examples just from 2020 onwards of how you could have analyzed these trends and made huge gains. And a lot of people did. So what if it was a downtrend? How do we analyze that? And then if we do analyze that, how do we confirm that it probably is a downtrend? So let's see that, and let's try to make sure that we understand all of this in detail. So right now in front of you, you see a chart. Let me just put my magnetic tool on so that I don't have to worry about a lot of things, in establishing prices and the line graph. So let's just go and talk about 2020. So as you all know that cryptocurrencies saw a huge hype back in 2018 or 2018 beginning or 2017 end, where we saw this big movement on the upward, where prices grew from just a mere of, I would say this is the beginning of this uptrend. So prices starting from $2,500 went up to $20,000 levels. That's approximately a 10 times gain, which is really unrealistic. But then gradually markets fell, and all of that happened, and then markets consolidated for a very long term, and then in 2019 it again came back up. And what happened back in 2020? Let's start from that, and let's try to start analyzing how trends really move. All right, so in general, let's try to see from the first hype cycle, which was basically the big move from a couple of $1,000s straight up to $20,000 approximately. It went up to, if you can see the chart and you now know how to read candlesticks, so you can really say that the high went to $19,798 on Binance. That's awesome, because now you know how to read charts. And when you know this, that here, this position, oh, it made a heart. This position was where it had actually topped off. So there was something from here that we can actually start analyzing, and you guys can get familiar with what a real trend really means. So when we were analyzing this trend, and I think where the heart is should be a reversal, because the movement started in the inverse way. Let's try to understand what really happened along this time. Let's just take another color on the chart, and let's see why this was a upward trajectory. So in general, this is what is called an uptrend. There are three kinds of primary trends that we need to really analyze. Is the market in an uptrend? Is the market in a downtrend? Or if the market is just going sideways, that means it is not yet telling you or revealing to you what kind of trend it is following. So let's try to see that if this chart is going to tell us whether this cycle was in an uptrend and whether we should have taken any kind of entries in either of these places. So let's say if you are taking the entry here, this position, that is pretty awesome, because if you are taking an entry somewhere here, then you would have made insane gains, because you can see the price levels are around $3,000 and it went all along to $20,000 odd dollars. All right. So in general, if you could have taken this call, what would have made you certain that you would want this call, and how soon could you have made it? Because the general trend would have given you an insight that, okay, let's go into this call. So let's try to see that. I'm just going to select another color, and here you can see that the price started from, let's just start from this candle where it has bottomed off. We don't really know that this is the bottom as of now, because we are in this time frame. That means this is kind of the 12th of September, and we're still, around September, whatever, 15 September, and we're trying to see whether we should take a call, which is a buy call or a sell call. Once we start understanding that this was where we started, and we saw a high which was made here, all right, and then we saw the markets kept moving upward, and we really saw another high here, and then we kept seeing higher highs over time, All right, each one, like you can just see higher highs, like if the highs are higher, and then it ultimately reached 6,000, and then obviously just, kind of catastrophically went. Let me just decrease the size of the chart, move them backwards, move it backwards, and see a proper view. And then slowly and steadily with higher highs, kept moving upward, and then finally reached here, and then the last one is already in front of you. So if you would have taken a call from any of these positions that I've highlighted here in this trend, then you saw that there was a gradual trend which you can see from here right up to here. It is going in an upward trajectory. It really means that this is a uptrend. All right, and when we saw that this stopped at a certain point and it didn't follow the trend, if you see gradually, all right, let me decrease the price a little more, let me squeeze the timelines again, you will see what happened, what really happened. And I'm going to decrease the time frame so much, so you can see that even in the bigger time frames, let me just select the marker, that even if you would have taken this position, the market in general was still in an uptrend. That's weird, right? But it took years, it took 4 years for this market to prove itself that it is still in an uptrend. That's how the market is. But if you could have understood that there was a certain trend that could have been followed, then you could have made a swing trade, then you could have opened a position on lower levels. And let me just show you, these levels were as low as $3,000. So if you actually saw that you could have taken an entry position, not exactly at $3,000, because that is probably somewhere unrealistic, because no one can actually just guess the trend pattern. You could have really taken entries at different positions, like this one, and then again on this one, and then here or anywhere up here. The general trend said that it's making higher highs. And the second thing what we need to see, and I'm going to make that as a trajectory and as a pattern, and then it will actually enclose what the trend really is. And let's just make another trend line from to really see where the lows were, because the first low was here, that was the low. And then let's just capture all the lows in general. So all the lows in general started, it's here, and then even they were making higher lows. So no low is actually showing that it's making a lower low. If this was showing a lower low, then I would have taken maybe a stream like that. The trend would have been a downtrend. But as you can see that it is not, and that's what really counts. What we need to see is that generally the market is making moves that are higher in trajectory. They're going upwards. The lows that they're making as a candlestick is not going lower than the previous lows. That means if this was a low where I've marked it, where we started, then the next low that any trend made, or like we said, market cycles, any market cycle made was, so next one, it moves like this and it comes here. So this is not a low which is lower than the previous low. And even the consecutive lows that in a normal market cycle it is making, it is higher than the previous lows. And generally, if you're making higher lows and higher highs, that's said to be in an uptrend. Similarly, if you are seeing that you're making consecutive lows that are, let me mark it as red because you will remember this always. If you will see that the market is making these kind of lows, so that's the first one, then you see it's making another one, another low, and then another low, then you're seeing that the market is in a general downtrend. What would you want to do when this happens? You would want to exit the market. You would want to exit your positions. If you're a normal trader, if you're an investor, or even looking at a positional trade which is a couple of years, it's still fine, because then you got to gauge is the uptrend stronger, or when the market's going down, do you have all the insights, all the fundamentals, everything that you know that this will really go downwards? Because if you really exit the market right now on a shorter profit or even some profits, then you might really miss the big move which you're really in for as a positional trader. So that's the downtrend. You see lower lows, and even on the other segment, lower lows were the first thing. The second thing was lower highs. So this was the high that you were expecting. It didn't break that. Even if it came through, it could have come through. It went down, then it came through up. It could have broken that. It didn't. All right. It stopped at a lower high, and then it started making lower highs. Every time it tried to go up, it started making lower highs. And then ultimately you can actually say that it's going in a downtrend. The trajectory is downtrend. This is the time you want to exit the market. You want to exit the trade. Anytime before this, actually, you want to exit the trade, or you want to short the market. If you want to make insane gains, this is where you short the market. If this was the housing bubble, and if this was the subprime mortgages in 2008, this is what you need to short. And at this moment, if you were at $20,000, and if you were an expert in trading, which no one is, then you would have made insane gains. Some people did, some people didn't, most people didn't. So don't regret it. And let's move forward and understand then what happens when the prices are not really, identifying such a trend. When they're not making higher highs and higher lows on a consistent basis. When they're not making lower lows and lower highs on a consistent basis. Then how can you really say that the market is in an uptrend or the market is in a downtrend? Because you're not able to gauge it. You're not able to understand where the market is going. Most of these times when the market are not going anywhere, they're just ranging in a specific kind of a rectangular block, which I will just show you here. All right, this one, then it is mostly said that the markets are consolidating or the markets are going sideways. So there is no general trend. We are trying to find a trend through a breakthrough or something, some kind of confirmation of where the market is kind of going, and then you would want to enter the trade. At these levels, because it's all kind of, complex and you're betting where it would move, there's no really, sound principle of entering a trade. I wouldn't enter a trade in these positions because the market has just reversed, but it is not really showing me the confirmation that the downtrend has been cancelled and it has been reversed and now it's going in an uptrend. So these are the concepts of even reversals where, the trend that was already ongoing is not going to be that ways and will reverse somewhere. All right. But what we need to really make sure is that the trend has reversed or not. Discussed till now was seeing how you can gauge an uptrend. What is an uptrend? It means high highs and high lows. What we also saw is a downtrend. Obviously, all these trends that we saw, we took an example of how it hyped up and it created a complete bull run from the 2017 bull run. And then we saw that it topped off somewhere and then it started going downwards and then it also started going sideways. All the three elements, all the three trend patterns that we need to analyze at every time. Is the market in an uptrend? Is the market in a downtrend? Or if the market is consolidating? All of these we covered. But let's come to a very basic concept of reversals. If the market is going upwards, it's not supposedly going to go upwards all the time. It's going to have a retracement or it's going to have a reversal. It's going to change patterns somewhere. Addressing these patterns, and if you can find these patterns, is where you actually have a chance to gain profits and make money. So while there is a general ongoing pattern, somewhere the trend will reverse. This means the prices will go in the opposite direction. So as we saw that while the market was going upwards and it was in an uptrend, complete bullish cycle, you never knew when this would have topped off and it started going down. Only if you were analyzing it closer, then you could have opened positions and you could have made insane gains. So this was the uptrend, the downtrend, and the consolidation. You know all the three types of trends that exist in the market. You can see this as, many other traders would see this as accumulation, then distribution, and then, obviously a long phase of distribution and accumulation again, and then shorter cycle of distribution, and so on and so forth. So we'll discuss this, although in our, in general, if you see the longer trend, then you would see that these markets are kind of consolidating in here, because this was the bull run started from here, really beneath from what we see where the consolidation is happening, and then this was the levels that it actually went from to the bull run. It came back, retraced back a lot, and then went into consolidation. So we need to see how the patterns reverse if there is a confirmation that there is a pattern reversal. So if it's generally an uptrend and the prices start going downtrend, then the general process is called reversal. It is important to also understand that it is believed that reversals are successful only 20% of the times, and 80% of the times it is believed that that if you see a reversal, all right, it will actually fail 80% of the times. So it's not just that you saw that it was going uptrend and it started going downtrend. You don't really make the call then. You wait for a confirmation. All right. So it is always better for the beginner to trade after the confirmation of reversal instead of before, when you're doing it in a predictive manner. You don't need to bet the market. You will never win from the market. All right. So the reversal should only be traded once you have the confirmation on the chart. We have been seeing the charts. It has been making higher highs and higher lows. It means it's in an uptrend. Once it starts negating that, and once it has confirmed that it has negated the previous trend of higher highs and higher lows towards lower highs and lower lows, then you can say, and you can really confirm that this trend has reversed over a longer period of time. So reversals help you trade a bigger price movement, as the prices may move in a faster and bigger movement or quantum because of the reversal. The sideways trend is really interesting because for most people it is easier to understand uptrend and downtrend, because once the market is going sideways, you also know that it can go sideways. If you never knew that the market can go sideways, it would generally, you would not know what is an uptrend or what is a downtrend. So it's really good for you to understand, if the market's going sideways, you can have a better clarity of what an uptrend could look like. The important part about the sideways trend is that nobody can anticipate for how long this sideways trend can continue, and also that it means that it requires expertise to trade sideways. Like, I don't want to be trading in a sideways market generally, because I'm waiting for the trend to substantialize and to activate, and then only I can see the confirmation from the charts. I can see from here. So for example, what this means is that if I was trading here and it started going sideways, generally in an upward direction or downward direction, starts going sideways, this market continued sideways for a very long time. This was months. Imagine being in a sideways movement from where you could have taken, an uptrend or downtrend position. If you were trading on a sideways chart on a longer tenure, then a longer duration, then you would be waiting, ages, and you'll be like, I want to make some trades, but I'm not willing to because the market's going sideways. So the markets can go sideways for a very long time before it actually starts making a move to one of these sides. So these consolidation lines can actually say that when to again enter. If we also see in general that even this consolidation, it's not properly making higher highs and higher lows. If you see this, even for a 1.5 year period, the markets were actually substantiated to a very small space. All right, this was a space that it was consolidating in. So it generally was going down and moving up, and then going down and moving up, but was still in this range. It was ranging in these directions. It was going sideways. It was not trying to make higher highs, because once it started to make higher highs, for example, if this was supposedly to be a trend, and then again there was a higher high made here, and then a higher high made here, and then here, then suddenly the market started going the other way. So it's still consolidating. It's not broken above the actual trend line, because we are looking at we were looking at this for the longer time frame. But if you were trading somewhere in about here, then you'll be looking at shorter cycles. You'll be looking at shorter market cycles. Like I told you, the market cycles are always going to be in this kind of a direction, right? And even if it's going down, so it's going to be in this type of direction. But what if the market is just going sideways? It's not giving you anything. It's not going down per se. It's going sideways, and then it's trying to go up and it's trying to go down. That's where you don't want to trade. You don't want to enter the trade. You lose money. All right. So you need to understand that these kind of trends can go both ways, and there is a high level of expertise that is needed in trading sideways. If you're trading sideways, the movements happen in both directions. It goes up and down, like I showed you. You wouldn't want to get into this trade. If you're an expert and you know where the market's moving and you know how to actually make moves, smaller moves, scalp, even intraday. I'm not saying that intraday traders are not going to be available in these markets for 1.5 years when the market is consolidating. They will be there. They will be looking at these patterns. And even these patterns would arise on a shorter time span than to a general longer time span that we are looking at. That's pretty much about trend analysis. And now in the future sections, we can actually understand that actual data representation is what is helping us on these charts to ascertain that the trend is moving in a certain direction. These data representations are very, very important, and they also highlight certain patterns that charts emerge from themselves. We understood in the last few sections that there is technical analysis where there is previous price movements and patterns that may arise even in the future, because it has arose in the past and it has kept probably reoccurring, and there is another highly likely chance for them to reoccur. So if we know before that has happened, and if we can see the charts well, we understand how trends are analyzed, then we can actually gain a lot from the market. So for now, you understand that there are three kinds of trends. If we look back on these kind of trends, they are uptrends, which means they're making higher highs and higher lows. And if it's a downtrend, they're making lower highs and lower lows. That means the market gradually is moving to a net movement of downward movement. And then there is a sideways movement where you're skeptical, or there's still ambiguity on a certain way that the market is moving. It is not making higher highs and higher lows on a consistent basis, and neither is it making lower lows and lower highs on a consistent basis. And this is when we try to say that the market is consolidating. It can even go on for months. All right, so this is the summary of what trend analysis is. We took an example of the bull and bear trend back in 2017 to 2018. I know a lot of people would want me to do the analysis of the pandemic that happened around these times, but I think substantially everyone should know what happened back in 2017 and what we can learn from it, and we can expect these going forward as well, as we saw that the markets moved again back from $3,000 up to $40,000. So what if the market comes back? We should be ready, and we should be able to analyze when the downtrend strikes, because right now in gradual succession we're making higher highs and lower lows till the time it actually breaks the lower low, which is supposedly, so this is the highest high that we got. And while it's actually trying to come down, we haven't really seen that this pattern is there, because it can just go up from here as well. So what we need to understand is that being a trader requires time and efficiency. Understanding what a trend really means helps you find where and which direction you would want to go and make your bets. All right, when you take a position, you want to be really sure that the market is in the same direction as you intend it to be. So let's look at other chapters in the future to understand the data representation really well, to understand what kind of indicators that there are, which will substantiate that maybe this is the bull movement. Maybe all these indicators will just help you enter the market or analyze the market better, and then take a better position, probably at a faster pace than others. Because although they are lagging indicators, if you can generally understand these trends on a long-term basis, you're basically trying to take a position for a longer term or take a swing trade for the movement of the market cycle, and that's where you benefit from. So in the next few chapters, that's what we're going to learn in the program. We're going to learn how data is helping us through with data representation and indicators, even volume based data points that we should definitely look for while trading. If we need to understand it on a TA basis, if we're just going with fundamentals and going with investors, obviously just to understand the general trend of the market will help you gauge if you want to buy or if you want to restrain from it for a while, and then once it starts proving that it's going upwards again and it's in the uptrend, you want to make that move. So let's see what we can learn in the next chapter.